Hello, everyone, and welcome back to Tech It or Leave It. You'll notice a couple things. One, Lana is missing. I'll get into why later. And two, I am dressed sharper than usual. The reason for both of those things is actually we're not in Dubai. We're in Ras Al Khaimah, and I'm joined here I'm honored to call a friend, a client, a partner, Michael Carbonara, CEO and founder of Ibanera, which we'll get into. So what are we doing in Ras Al Khaimah? We'll get into that, but we are at RAK DAO. That's why you're seeing people around us. The beautiful artwork here. I don't know anything about art, and even for people that don't know anything about art, there's a Picasso casually standing there in the middle. There's a lot that we can get into, and I know that we don't have that as much time as we usually have, but without further ado, Michael, why don't we start off with something simple, okay? Um, Give us a little of an introduction. I know you, but for the viewers, give us a little introduction about yourself. I know you're in Miami, but you're not from Miami, right?
Right. But actually born and raised in New York. I've lived all over New York, grew up in Long Island. I've lived in the city. I've even lived in Woodstock, upstate New York. Um, so I saw a little bit of city life, a little bit of the country, farm life. And guess it was about 12 years ago, I decided to move to South Florida, Miami. And, I've been happy ever since there. And
Yeah.
yeah,
Do you think that'll anger a lot of people watching from New York?
no, they all want to go to Miami,
Yeah.
everyone. You start
Um,
off by going on vacation, then you never leave.
yeah, yeah. I guess that's also the story with Dubai. That's what happens. UAE is 90% expat, right? So people start by coming on vacation. They go like, "Do you know what? We'll move here."
Yeah, it's a beautiful place.
I
I was pleasantly surprised.
Yeah, well, I still think it's going to happen with you. By the way, this is your second visit
Yeah,
this year. Um, is the food better in New York or in Miami?
it's a tough one. You get different cuisines, different cultures. Uh, no, I like Miami. I don't think I'm going to move anytime soon.
Fair enough. Fair enough. So why don't you take us back a little bit because we've been working together for over a year now. But Ibanera has been operational for much longer than that,
Hmm.
and even longer than that, you've had your own personal entrepreneurship story. So why don't you take us back a little bit to your story as an entrepreneur, right? I mean, today you are the founder and CEO of Ibanera, and you're personally involved with a lot of other companies as well.
Mhm.
And we've spoken off camera about your future plans as well. How did that start?
I guess, I went to college after graduating high school. And at the time, I didn't know what I wanted to be. I just knew, after high school, you go to college and you figure it out. And I went and I still didn't figure it out. And I had different jobs. I probably hated every one of them. Not much of an employee. And then I guess was just trying to find out who I am and what I like to do. And I realized I'm an entrepreneur, and that's just not something that you really read in a textbook. It's not something you necessarily teach. I know entrepreneurship is something in class, but it really takes hands-on experience, and it's about dealing with people. And so in my late 20s, I started setting up businesses, and no longer an employee, but taking risks, taking chances, and being creative. And I got into financial services. So that's really where I got my start.
Wow. So you started off working regular jobs, and you said that wasn't stressful enough. You wanted you,
Yeah.
you wanted you wanted to become an entrepreneur. So how
Yeah. So I stopped working 9 to 5 and worked pretty much 24/7.
that's a good. I mean, I saw that saying a while back. An entrepreneur is someone who would rather work 24/7 for himself rather than 9 to 5 for someone else. And
Mhm.
then seeing you work over the last while, I see that, right? And even now, this, by the way, I'm gonna throw you under the bus a little bit. This interview was scheduled like 2 hours ago, and he's just been in back-to-back meetings, and I'm seeing him do 2, 3 meetings at the same time over here with the top
Yeah.
people in the conference. And even after that, after this, I'm sure that's gonna happen again. Um, but you've been operating like this for a while. Personally speaking, do you ever get overwhelmed? how do you deal with you know the obstacles of just being a human being sometimes?
I used to, and there's moments of it, but I kind of learned that that life never stops, and you have to get used to living in a little bit of chaos, and
Yeah.
chaos has become the comfort zone, um, which is a good thing. I mean, it's motivating, but there's always going to be problems. There's always going to be stress, and you just have to understand that's a fact of life. It's always going to be there. You can't turn it off.
Hmm.
So you have to be comfortable in that space.
Yeah. And um, do you think there's a level of anxiety that kind of comes up when you're not busy?
Absolutely, yeah. If I'm not busy, there's something wrong.
Yeah.
Yeah, that's what goes through my mind.
So let's talk about how busy you are for a second. And what I mean is let's now talk about why we're here, which is
Hmm.
Ibanera. Um, I've seen you explain Ibanera probably a few thousand times in the in the last year. Um, why don't you explain it again
Sure.
for the viewers?
Sure. So, I started out in the acquiring business, really building technology, payment gateways, learned in acquiring. And then about, a little over 10 years ago, Europe passed the Payment Services Directive. And that was the first regulation around the world that really created the fintech movement, where electronic money institutes and financial institutions, PSPs, were almost like quasi banks. They weren't depository institutions, but they gave fintech companies more ability to control the business flow. And so I started off and trying to figure out how to do that. And I wound up in Lithuania setting up electronic money institution license, which finally was granted approval in 2018. And always trying to keep a step ahead and the next thing and keeping forward of the trends. Before the license was granted, I went to Singapore and started working with the Monetary Authority of Singapore to set up as a major payment institution. And so things grew. And it grew from just acquiring to, people call it neo banking, but it's really acquiring and then remittance, then currency exchange, issuing, uh, cross border payments. So what started off as kind of just acquiring grew to a full ecosystem of all the different ways to pay in and to pay out, call it on ramping and off ramping. But it was really an ecosystem with compliance, payments, remittance, custody, all these different services that businesses and fintechs need to operate.
Right.
Most fintechs and most businesses don't really understand the regulatory part. They don't have the compliance experience. They're just looking to open their business and market it. And I think with Ibanera, we created an ecosystem that's API driven, that depending on what business you want, or as a bank or as a fintech, what support you need for different remittance or money services, any moving money, compliance, we we solved a lot of custom problems to a point where we created boxes that are more turnkey.
Right. Yeah. I mean, I'm seeing that a lot, especially with the type of people that are approaching you and saying, "Oh, we've been looking for this for months or years even." What do you? But frankly speaking, there's a lot of fintech companies and there's a lot of neobanks and there's a lot of banks that are coming out with their own products and tech companies that are coming up with their own fintech solutions.
Mhm.
What would you say is the core thing that separates Ibanera from each one of those?
The biggest difference is that, again, we're not a one product company. We're an ecosystem, and we're multi jurisdictional, and we really solve the full back end. Where, I mean, we're more of a network rather than a payments company, and we make it easy. And we've done all the hard work dealing with regulatory regimes and oversight, and navigating through those hurdles and through different jurisdictions. But
So, I mean, let's talk about the regulation landscape right now because it's prevalent conversation
sure.
given where we are. Um, was there a moment in the company where there was a choice made between you and your partners to pivot into Web3?
There
Or
was. So, part of that journey from Lithuania to Singapore, and then after Singapore, focusing on the U.S., it was really interesting because in 2017, I would say, uh, called crypto or blockchain got mainstream, at least in the news, when Bitcoin first hit $20,000. The market wasn't mature then, but it gained the attention of the market.
Mhm.
And so there was at that point a lot of startups, a lot of scams, good and bad things were happening. And uh, there was always a question of, I need banking to support this new business model. And there really, nobody knew where to go.
Mhm.
So we saw the trends. We started building out the Web3 ecosystems. And then I would say COVID hit. And, at that point, traveling was done. But what was really interesting is from one year to the next, the US is very Web3 driven. Um, I'm not saying that did end badly for some people because the oversight on the scams weren't really put in place, but I think now it is. But at that point, the writing was on the wall that Web3 was here, and we needed to build the infrastructure. And
Right.
focusing from a compliant AML perspective, we focused on not crypto, but a Web3 ecosystem that was backwards compatible with Web2.
And that's what a lot of companies are looking for, and a lot of the business that you guys do are not necessarily with crypto companies. They are with Web2 companies that want to incorporate payment solutions that facilitate their customers' needs for crypto payments and crypto acquiring and virtual cards and so
Sure.
on and so forth. And so I see what you're saying. Of course, now the company has presence mainly in the U.S., Europe, and different parts of the world, and as of recent, in the UAE, right? Um, I know, given the context of me asking this, but again, what are your thoughts as an international entrepreneur? What are your thoughts about the UAE as a region for business, just in general, but also for the industry of Web3 specifically?
I think there's a lot to that, and I've learned this with my short amount of time here. The one thing that is hands down a major difference is the government here is pro Web3, and they see that this is the way of the future, which it is. It's no different than the .com era of the '90s, except this next phase of development of innovation that makes commerce, consumer spending, security, auditing, transparency. It makes it way easier, and it's the old way of doing things are not going to be here in a few years. So
Right,
the government sees that here, and what's phenomenal is the banks here are also supportive of it, and have a combination of the banks and the government. That's pretty rare because in most other countries around the world, it's a constant fight, and nobody really has clear direction of where they want to be with Web3.
right.
And then second, I think the other part about people coming here is the quality of life. It's safe, it's clean, it's family friendly, it's taxes. I
Yep.
mean, it really checks off all the boxes. The government here is really doing a great job of creating a country that's people are excited to live.
I'm telling you, it's gonna happen. You're gonna move here. We're gonna become neighbors eventually.
Maybe.
um, so we're just to give a context for everyone watching, we're in Ras Al Khaimah right now, and we are actually at RAK DAO's event in their 1 year anniversary, and Ibanera is not only title sponsors but also main ecosystem partners with RAK DAO as well.
Mhm.
Um, so and but we're here right now at the Ibanera stand or booth with some art pieces over here that I mentioned earlier. Could you explain a little bit about what's going on over here?
Sure.
This
So
is not your private
no,
collection,
of
right?
course not. Web3 is there- uh, my personal opinion. The two big drivers on it is not cryptocurrency, but rather real world asset tokenization as NFTs and stablecoins. Because what it really is doing is driving peer to peer commerce in a secure, transparent way. So as Web3 evolves, there's going to be all assets, all purchases essentially will become an NFT for auditability, for proof of provenance, a number of things. So uh, with that, we are doing a few projects with tokenization, including tokenizing bank debt, tokenizing real estate projects. But this was a lot more aesthetically pleasing
Yeah.
for a conference. So this was a use case of tokenizing real world assets as masterpieces, works of art, which traditionally, if you want to securitize something like this, there's the investment fund structures. Luxembourg's famous for this for decades. This is how you take advantage and monetize these types of assets. But if you add tokenization, you create a wider market, and also potentially drive up pricing by increasing the number of customer demands by having more than one purchaser. You can have fractional ownership with many purchasers.
Yeah, and that's something that already exists, but not in a format where it's tokenized by and backed by Web3 tech. I mean, there are broker companies that sell fractional pieces of artworks, but they do it on their private ledger. They don't do it on a decentralized, secure
Mm,
ledger, and also not necessarily internationally compliant, right?
sure.
Um, where the access is super limited. Like, you might have a company allowing fractional ownership for tokenized assets in the U.S. and in Europe, but not the rest of the world, right?
Sure. Sure.
Um, so I mean, there's a Picasso there. Like, we've
Yeah.
they flew in a Picasso overnight to put in the booth, and along with the a huge catalog of artwork that they're going to be working with. So it's exciting stuff.
It is. Yeah.
Yeah.
And I think a big part of this tokenization of assets being slow to take off is the regulation and knowing is it secure. And so that's where Ibanera comes in, because of we know how to do compliant wallets, we know how to transmit money compliantly. So if you have the purchaser and the buyer compliantly established, including things such as the travel rule and know your customer, it makes the more secure, trusted environment rather than just a pure DeFi play.
Yeah. Yeah. I think the buzzword of DeFi or crypto is going to go mainstream has been thrown around for like a decade,
Hmm.
right? And I think one of the core there's a few reasons why it hasn't gone mainstream. Like, I think in a lot of ways it has, but there's a few. But people are thinking about the next level of
Hmm.
adoption. I think one of the main reasons is fear of uncertainty when it comes to compliance, fear of uncertainty when it comes to security and regulation. Because frankly, while the tech itself, like the blockchain itself is immutable,
Hmm.
unhackable, untouchable, so on and so forth, the applications that users use, like exchanges, wallets, and stuff, to interact with the technology is not necessarily immutable, unhackable, and
Sure.
safe. Because that's where all the uncertainty happens. Case in point, FTX and stuff like that. And so I think another thing about Ibanera is that you prioritize both innovation and compliance, with no compromise to either,
Sure.
right? Because you need both to address the market, because that's what the market needs. They don't need another application that they're not legally allowed to use. They need safety, they need security, and they need efficiency, and those three things. And I haven't seen yet a compromise from Ibanera thus far.
No, it's funny. Our chief security officer actually asked ChatGPT last week if Ibanera has any security breaches, and it came back no. So,
That's good. That's good.
uh,
Knock on wood for
yeah,
that one. Yeah.
but yeah, so it's a tricky situation because the first movers into blockchain want to do it for security reasons, and people wanted to have control of their own assets. They wanted ownership. Uh, they wanted to know that it's their wallet, it's their money, nobody else can get to it. They don't want hackers. It's their property. But the issue is that when you want to come on and do an exchange, swap with people or pay people for goods and services, peer to peer is great. And if you think about it, PayPal is an example of peer to peer. But if you have a problem, you have recourse because you go to PayPal as a governing body saying, "Hey, I need to do a chargeback, or I didn't receive my goods." So DeFi is great; it gives you more control. But at the same time, when you're dealing with somebody you don't know, you need that permissionless trust. But you need the KYC and AML because you need to have recourse on their situation if you don't actually know the other party.
Right.
So you need to kind of straddle both worlds.
Yeah. And also with when it comes to DeFi applications and blockchain applications, it's nice that individuals have more control. But what I'm seeing a lot is that even with more control, a lot of people don't realize that with that also comes with a lot more responsibility.
Yes. Yeah. And that's a big part of the adoption. It's a new technology. It is an educational process. So these things are generational. They don't happen in 1 year or 5 years. It's a 20-year process. It really takes a generation of
Yeah.
adoption before it becomes fully mainstream.
Yeah.
And I'd say we're probably 9, 10 years into the adoption of smart contracts, of actually people using it. I know Bitcoin came out, 2009, but what we're talking about, the real commerce and e-commerce of Web3 is smart contracts. It's not necessarily the Bitcoin blockchain. So I look at it as we're almost 10 years in. So within another 10 years, I see Web3 as really being the majority of most of the transactions in the world.
When we say a term like Web3, we're talking about the biggest commerce platform on the planet, which is the web, right? Web 1, we're talking about late 80s, early 90s, which, existed, but in a very minuscule,
Yeah.
some middle class families had a computer in the house, right? But, and then we had the .com era, which was the Web 2 era, right? Where data can flow in two directions. And now the Web 3, there's no official definition of
Hmm.
Web3, but people are saying the data is now owned in different directions, right? Because before, in your example of PayPal, while they're not the owners of the cash that goes through PayPal, but they're the custodians.
Correct.
So they have, they control the liquidity and they're responsible for that, right? So if something wrong happens, you could call up PayPal or message customer support. um, but with Web3, the custody and the responsibility is then flipped onto the end user, right?
Correct.
But the issue there is that we're taking a step back in scalability. If you're having a pure P2P market, we're going, okay, it's digital, but we're going back to the barter system, right? Like what, it's if it's purely peer to peer and there's no synced market
Sure.
for assets, it's not you remove the use case of what money and fintech solutions are supposed to bring, right? And I think there's a lot of companies, and maybe you can say your opinion on this. Frankly speaking, 95% of the industry is not going to be here 5 years from now. It's that 5% of the core value drivers. Whatever the Fang index of today will be tomorrow,
Sure.
they are going to be the ones that are controlling the market. Because yes, the .com bubble wiped most of the market out, but Facebook, Amazon, Netflix, Apple, all of them are still operating, and now they're the biggest companies in the world. But that's not permanent. Now we're seeing the Web3, and the Web3 companies are, like you said, maybe 10 years down the line are going to be the biggest in the world. But I
Yeah.
mean,
I mean, just like anything, there's it's not just the technology. It's actually about running a successful business,
yeah,
and it's hard. You need investment. You need sales. You need operations. You need innovation. You need to set yourself apart from others. And there's just you have to keep up with the regulations. They could pass laws that you're out of business. So it's difficult, but I think just like any other wave of business flow, you get people that don't make it, and then the ones that do, a lot of them will be acquired by the big ones that don't need to innovate, that just expand by acquisition.
yeah, which is what they're doing, right? Um, we spoke about your personal journey and Ibanera's history. What can people look forward to from today?
From Ibanera's perspective, our mission hasn't changed. We're building our ecosystem and continue to build a cross-border, multi-currency, Web2, Web3 interoperable ecosystem with fully embedded AML compliance as a network that's API driven. So fintechs, financial institutions, businesses, they don't have to necessarily innovate. They can build what they need to build. Regulations and banking is probably the toughest part of any business. And it's usually the last thing that most businesses think of when they start up. So we try to take care of that heavy lifting because we've already put the infrastructure in place. And we're going to continue doing that and expand to the countries that really need it. We're in the U.S., we're in Europe, we're in Southeast Asia, now Middle
Now in the
East,
UAE. Yeah.
and we'll keep expanding here. And we're really doing some interesting things in South America, Latin America over the next few months to launch there as well.
Is there anything different about doing business in the UAE that you've noticed from other countries?
Yeah, it's I've never seen, like I said, the regulators or the government and the banking system to be so forward thinking and understanding what's actually going on. I've been to bank compliance conferences. I've spoken to banks. Some get it, but I would say this country as a whole, the RAK DAO ecosystem, they get it. And I think that, you know, maybe in the beginning they didn't get it, but they brought in all the experts to make sure that everybody understood. And they're pushing on this very hard, which I think is great. And, I try to put things in perspective. And, I was mentioning this earlier on a panel today. Think about any country that's today that didn't put in Web2 infrastructure. What if you didn't have Web2 infrastructure where you could have e-commerce, you can shop online? As a country, where would your economy be today compared to the countries that invested in those fiber optics and those T1
Right.
lines and have fast internet? You go to places that are in emerging markets that don't have that, you can't compete. And so the first to market here, it's going to increase speed, lower cost. And of course, that equals more revenue, better economy, better quality of life for everybody here that's participating.
Yeah, absolutely. Look, in the final minutes of this interview, we've been talking about financial revolutions, right? I want to talk about one more revolution, right? Because I know that you're specifically involved in this one. In the last couple of years, we're seeing a lot of AI in headlines, right? And I know you've made some AI headlines over the year. Um, what are your initial thoughts about some of uh, the reactionary questions that people have? Is AI going to be a threat at some point for people? Like in there's the conversation of it's going to take jobs, it's going to rule the world, it's going to do all that. But on the same hand, I can't imagine life now without Chat GBT or a
Yeah,
lot of the other applications that we don't even know are backed by AI tech, right? So
sure,
give me your initial thoughts about the industry overall, and then also maybe you can get into some of the exciting stuff you're doing as well.
sure. Well, I'd say AI is absolutely taking jobs away. It's already done that. And it will, ChatGPT is probably taking a lot of jobs away,
Yep.
but it's a tool just like any other tool. And we have to adapt to it. We've always adopted to new technologies. 100 plus years ago, we were still driving around with horse and buggy, and they thought, the horse and buggy industry was scared of cars, but people adopted, and the same thing with computers. So what it's going to do is just going to let us do our jobs better. But if you don't adopt, you'll get left behind.
Hmm.
And I don't think AI is scary at all. I mean, a lot of people have this misperception that it is could be conscious, but fundamentally, AI only knows what you put into the AI. So people got to realize it's the aggregate of the data of all the input. So its output, its answers, no matter what you ask it, is there a God? If it says yes, it doesn't actually think that. It's aggregating all the data of the thousands and thousands of people that have already answered that question to them. And so they weigh those options. If they get 99 yeses, they're going to weigh that yes 99 times versus one no. So people got to realize it's not a danger. It's just an aggregate of the input of the people that are actually giving it information.
Okay. Um, you were on stage today. You had a great talk with your fellow panelists. Are you gonna do more media?
I don't know. It's exhausting, but I think it's part of the job.
Yeah. All right. With that, I have that on record finally. Um, thank you, Michael, for your time.
Thank you.
Thank you, everyone,
Thank
for
you.
watching. Please follow Ibanera on all their platforms. Wherever you're listening on this, make sure to follow, like, subscribe, and whatever platform it is, share it, and yeah, follow for more.